All right, hello everyone. Welcome to my channel once again. How are you doing today? Trust you're doing great. All right, today we want to take a look at Doji trading strategy. Doji. Like I will always say, if you are trading the forex market, if you do not have a strategy, you are gambling with your hard-earned money. So never trade without a strategy. Even if you have gotten forex training, training without strategy would lead to you losing your money. All right, so if you have not watched my previous videos, I've been teaching about forex trading strategies. I've done others. Go back and watch the other ones that I have done. So today we want to look at Doji forex trading strategy. Doji is a very important reversal candlestick pattern. All right, understanding the psychology behind the formation of Doji will help you to know where the market is going next, whether it's whether it's going up or down. All right, for every Doji, the opening price and the closing price are the same or almost the same. All right, and for every Doji, it means reversal is about to happen. And of course, there are different types of Doji. They look differently, but they tell the same or almost the same story. All right, now for the different types of Doji that we have the bullish Doji, bearish Doji, long ledge Doji, gravestone Doji, and dragonfly Doji. Now for a bearish Doji, it means that the price is at the support, Doji is formed, and then it's expected that the price will go to the upside. For the bearish Doji, the price is at resistance. It's expected that the price is going to fall, and if it meets any condition, confirmation is seen, then it will come down. All right, so what is the psychology behind the formation of this candlestick? Now this body, this is the body here. All right, this is the opening price, and of course the price will not just be static. It will not stay one position. It will be doing what? To be going up and down, up and down. And let's assume this is 1 hour candlestick pattern. Let's assume this is 1 hour Doji. So within the hour, the price has been going up and down, up and down, up and down, up and down, up and down. And then at the end of the day, at the beginning of the day, the price opened here. At the end of the day, the price opened here, or almost the same price. All right, so that means indecision of both the buyers and the sellers, depending on where this Doji is formed. All right, so this one is actually called the bullish Doji. So if it appears at a very good location, it signifies buyers are ready to reverse the market to the opposite direction. Why this is bearish Doji? The same psychology. The price goes up and down. It opens here, all right, and goes up and down, up and down, up and down, and at the end of the day, it closes at this point. Also meaning indecision between the buyers and the sellers. All right, so if it appears at the resistance, all right, appears at resistance, it means there's indecision of the buyers at that point. Perhaps the sellers at the resistance are much, and so the buyers got there and becoming indecisive, or the pressure is not much again to push the price and break the structure that the sellers have created at that point. All right, so it is the same psychology between the bullish Doji and the bearish Doji. The same idea. The price open the market open at a particular price. It goes up and down, and then it closes at the same price, or almost at the same price at which it opened at the end of the day. All right, so we have different types of Doji. The long leg Doji, the same thing. You see the body is thin, which means the price, the opening price and the closing price are the same. The price goes up and down, up and down. At the end of the day, it closed at the same price where it opened. Same, this can be seen at a support or resistance zone. So it doesn't matter, at the support or resistance zone, this long leg doji can open. So it's called long leg because the lower wick is long and the upper wick is equally long, but the body remains the same. Now for the gravestone doji, usually it appears at the resistance. All right, resistance meaning the price is ready to fall at the resistance. The same psychology, the price open here, the buyers push the price to, let's say this is resistance, and the sellers push the price down. All right, this wick here indicates that the price actually got to this point. The price actually got here, and because of the pressures of the buyers, of the sellers here, sellers push the price down, and eventually before the end of the day or at the end of the day, the price opened, closed where it opened previously. So going by the wick, the long wick, it shows that it's the sellers that push the price down. So for the next hour or the next day, it's expected that the price will continue to go down. All right. Now, the next one is called Dragonfly Doji. Dragonfly Doji, meaning the price open here, the sellers push the price down, and then eventually came and closed at the price at which it opened. All right. Now, this usually appeared on a support. It appears on the support zone. So when it appears on the support zone, all right, it means that the buyers push the price and close here. So the next hour or the next day, it is expected that the price will continue to go up. And of course, confirmation needs to be seen. Don't just trade these without confirming. You wait for the next candlestick. The way the next candlestick appears, or the formation of the next candlestick will determine whether it will continue to go up or not. All right. So now let's take a look at some charts. Okay, so we can see this is the support. All right, the price reversed at this support. Buyers here, and there was buyers at this point. That's why the price went up, came down to this support zone. The buyers are here also waiting. The pressure of the buyers here are much, and so the buyers push the price to this resistance. At this resistance as well, there are sellers. Sellers push the price down back to the support. And the buyers are also here. They're here and they're also here. And then they push the price up. And then this doji is formed. Look at the doji here formed. All right. Now look at the long leg. It shows that the buyers here, they are very, very strong. So depending on the next candlestick, determine whether the price will really go up. All right, so let's take a look at another chart. Okay, this is the bearish pin bar here. I believe you can locate the bearish pin bar here. But look at the chart very well, you'll be able to locate it. All right, so this is resistance zone. All right, the buyers push the price up, go to seller zone, resistance zone. The sellers push the price down. We go to buyer zone here again. The buyers push the price to seller zone again, and then this doji is formed in decision. Then after doji is formed, the next candles shows that the buyers could not push the price above this resistance. Then the sellers came in with their pressure and pushed the price down. All right, so knowing how to trade doji is very, very key. When you incorporate doji to your trading strategy and you are patient enough to wait for confirmation, you'll be getting good trades. And the time frame, it works on any time frame, whether it's 5 minutes, 15 minutes, 1 hour, 4 hours, and so on and so forth. But the best time frame to trade doji is 1 hour, or 4 hours. It also works on the 15 minutes candlestick pattern and also on the 5 minutes candlestick pattern, but it works a lot on the 1 hour and 4 hour chart. All right, thank you very much for watching till this time. If you find value, please kindly subscribe to this channel so that subsequently you'll be notified with my subsequent uploads. Also like and share so that others will benefit from this.